Now look at taxable income. I want to have a look at another aspect of taxable income, the Medicare levy. To do this, I just want to go through like a very simplified tax return form. Now, the Medicare levy is basically a levy on most taxpayers, and it's used to pay for our public hospital system. So we're just going to have a look at a bit of a case study here. We'll start with Jan, who's an Australian citizen, filling in her tax return form. So we'll tick yes for Australian citizen. We'll just put her name in here. Now, gross salary is all your salary that you've earned, be it from your employer or from interest in a bank account, from shares, from dividends, wherever it may have come from. And so Jan has earned a nice tidy salary of $105,000 this year, so we'll enter that in there. Now, as well, we've talked before about deductions. We talked about some different types of deductions you can have. So I've got some different types here. Last time I think we just talked about work-related expenses, but things like charitable donations are also a deduction. So Jan sponsors a child and has made some other deductions. So she has $625 in charitable deductions. Union fees, they're also considered a tax deduction. So in Jan's case, $590 for her union fees this year. And then work-related expenses, having saved her receipts for expenses or kept a logbook for her car use. She has work-related expenses that total to $1,350. So if we add up all her deductions, giving us this figure here, we get $2,565 in deductions. Remember, this is money that should not be taxed. So gross income minus the deductions gives me the taxable income here. So the taxable income will be A take away B. If I do that, I get $102,435. And so now that's our taxable income, and it's this income that will be used to calculate the Medicare levy. But there is a little catch with the Medicare levy. And basically the catch is that if you don't have private hospital insurance and you're a single individual, and if you earn greater than $84,000, you might be liable to a Medicare levy surcharge. But to start with here, we'll just say, let's say, did you have private hospital insurance? In this case, we'll say no for Jan. So the Medicare levy, the normal levy, is 1.5% of your taxable income. So Jan's taxable income is $102,435. She has to pay the 1.5% of taxable income. So she's going to pay 1.5% of $102,435. She's going to calculate that. When you calculate that on your calculator, you're going to find it's got 3 decimal places. Remember, we're working in money, so around those 3 decimal places off, $1,536.53. And that's her stock standard Medicare levy. And if she had private health insurance, that's all she would pay as a Medicare levy. But if you've answered no back up here at question 6, you need to pay a surcharge, an extra amount for high income earners to support the public hospital system. And that's an extra 1% of taxable income. So she's going to have to pay 1% of the $102,435. Haven't left enough room here, but if we work that out, we'd be able to put a decimal point straight in there and say it's another $1,024.35. So, surcharge only for high income earners, Medicare levy, practically all employees, all wage earners, salary earners have to pay a Medicare levy of 1.5%. Very quickly while I'm here, I just thought I'd look at something else, something a little bit different, and that is superannuation. Now, superannuation is basically savings for your retirement. And so, for a few years now, employers have had to make a contribution to their employees' superannuation, and that contribution at the moment stands at 9%. You might have seen some ads recently about this, and it's about to increase. But right now it's at 9% of their gross income. So this is money that the employer contributes on top of their gross income. So assuming all this income was just from the employer, then Jan would also get paid 9% of the $105,000. So that would be $9,450. Now Jan's not going to see that money straight away. That money is going to go into what we call a superannuation account. It's going to be invested, and it's going to be stockpiled for Jan's eventual retirement. so that when she's finished, she'll have money each year that's put in there to pay for her retirement. So just running through it quickly, taxable income, gross income, tax deductions, subtract those two amounts to get my taxable income. Taxable income, I have to pay Medicare levy of 1.5%. If we don't have private hospital insurance, as a single over $84,000, another 1% surcharge from Medicare levy, in Jan's case an extra $1,024.35. Okay,